My presentation focused on the state of the infrastructure market, especially on this current dichotomy we have between the lack of public funding or the deficit of public funding for infrastructure and the surplus of private financing that there is in the market, with lots of liquidity and lots of appetite amongst institutions to invest.
My presentation focuses on the impact of Solvency II on institutional investment and infrastructure investment in particular, and looks at the barriers that could be creating.
I guess from the perspective of new issuance, what we see is a lot of momentum across the power, infrastructure, and the oil and gas regions.
You know, we heard from the other speakers how much that the energy, oil and gas plays in the project finance world. I wanted to talk about the pricing of gas, oil, and the other commodities and the power. So we've got the inputs and the outputs, and actually how misunderstanding how those prices can develop over time leads to some of the projects that have defaulted.
The client segment that I talk to, which are pension funds and asset owners, you're seeing a genuine improvement in the understanding of what infrastructure investing brings to the portfolio, be it from an inflation hedging standpoint or from a growth delivery standpoint.
We spoke about our project finance model, the way that we assess the risks in project finance. It's a very actual and important problematic right now.
I think it's always good to interact with other practitioners instead of just being enclosed within your own little box at home working away on your spreadsheets. It's always good to get a sanity check with other providers and other practitioners.
For me, I work in a very specific, small area of project finance, so to get experience and understanding from participants on the full spectrum, people within risk, people within origination, people from insurance. It gives me a kind of a full spectrum of understanding of project finance.